Good afternoon, everyone.
Good afternoon, sir. Sir, I have a doubt in
Yes,
sir that in salary, sir, income from salary, the last program which you are teaching, like with the two cameras, so that I have solved and I have shared you also, sir.
I will
So
check
I
it
don't
today.
know the exact answer what it is, sir. Please,
I'll check it today. I have so many
sir,
messages
please
to
check
be
and
shared.
tell me.
I'll do that.
Yes, sir. Yes,
I'll do that. Now, one more thing before I
yes,
start
yes,
the
sir. So
class.
please, please, I have done, sir. I have solved.
No problem. I'll check it. One
Okay,
more
sir.
thing.
Okay. Thank you, sir.
Uh, on your WhatsApp group, I think each mentor has posted on his individual WhatsApp group regarding something related to starting of college in physical terms. That means you coming on campus. I hope you have gone through that particular message. I have posted in my
Yes, sir. Yes, sir.
okay. So there are a lot of things that have to be mentioned. There are a lot of things that you have to do. There are consent letters that have to be signed. Please go through that particular message once again. Share it with your friends, those who have not got it, and see to it that you respond to that particular query that has been raised before 15th May. Sorry, before 15th November. Okay, so that data is required, and based on that particular data, the data has to be submitted to the university also, because the university is planning to start physical classes. Okay, it has been noticed by the university that students are roaming everywhere, but they are not attending classes. Now, to see to it that students attend classes, they have come to a conclusion that classes have to be started on physical terms. Okay, so go through that message once again, read it, show it to your parents, get their consent, do whatever the formalities have to be required to be done, and then you are required to submit some information. Please submit the the information, and don't come back on Tuesday saying that classes hai ki nahi. Okay, we'll intimate you whether classes are there or not there, but we require some information before that. Okay, so your duty is to fulfill that particular part that has been put on the WhatsApp, and wait for further instructions. Is that okay? Fine. Next
Yes,
important
sir.
next important announcement that I have to make it 1 minute. Just start the recording.
In that summary sheet of investment management, so what is the beta value? And there are two p values also. The p values, there are two tables, like two columns.
Okay, I'll explain. I'm just stopping the screen. I have the data with me. I'll just share you that. This is what you're talking about.
Yes, sir.
Okay. Now, what beta value have to be considered? Beta value is this value.
Skewness.
This is what I require, and this is the p value that I require. Now, in many cases, p value will come in this way. Okay. Do one thing. Just go to general. Okay. Sorry. Just go here and do the comma mark. Okay. Just go to general and select comma. Okay, then you keep on increasing the font. So here your beta value is coming to zero. Sorry, your p value is coming to zero itself. Look at the number of decimal places that have increased. So your p value is coming up to zero, which means if you are proposing a hypothesis, your null hypothesis would get accepted because the value is zero. Condition for null hypothesis to get accepted is your p value has to be less than 0.05. 0.05. Okay, 0.05 has to be your p value. So always consider this particular p value, not the upper one. You should never consider the upper one. The lower value should be considered. Getting it, Swapnil?
Yes, sir.
Yeah. Anything else?
So coefficient of determination.
Coefficient of determination. Okay. Coefficient of determination is your r square. R square is always your coefficient of determination. And this is your multiple r is nothing but multiple r is your correlation. Please note once again. Multiple R is your correlation. R square is coefficient of
Okay, sir.
correlation. Okay, don't worry about adjusted R. Don't worry about all these values. Done?
Yes, sir.
Please go through this particular problem. Have you gone through it? Have you gone through it?
Yes, sir.
Okay. Now, how do we solve this? There are too many things that are given here. How do you solve this?
So the same thing that first we have to consider the sale price. Then there are and we have to consider the this is the long term, so ICOA and IC acquisition and improvement we have to take.
Mhm.
But the addition of two rooms by Mr. X in 1998 and 1999, we don't have to consider that.
Okay.
It's before 2001, so we should neglect that.
Okay. But you see that, this Mr. See, what happens is this: there is a person called Mr. X, okay, who has a property, whatever he has purchased for. Okay. He enters into an agreement to sell this particular property to Mr. A, right? And he takes an advance of rupees 10,000 from A. And Mr. A could not stand to his promise, and that is the reason whatever 10,000 was paid to him as advance, Mr. X kept it to himself. He did not return this particular money. Okay, that is the reason the word forfeited is mentioned there. Forfeited by Mr. X, which means not given back. Okay, then Mr. X gifts this particular property to his friend Mr. Y. Okay, in May 2005. Then there are certain expenditures that have been incurred. Later on, Mr. Y enters into an agreement to sell this particular property for 8,50,000 to Mr. B. Okay. Now this transaction has happened after 2001. the transaction between Mr. Y and Mr. B has happened after 2001, right? And Mr. B paid 50,000 rupees as advance to Mr. Y, okay, and telling him that the remaining money would be paid to him in the stipulated time as per their terms and agreements of the contract. But for one or the other reason, Mr. B also could not keep his promise, and whatever money was given as advance to Mr. Y was forfeited again by Mr. Y. And finally, Mr. Y sells this particular property to Mr. C for 18 lakh 75,000 in December 2018. They have asked us a question, what would be the capital gain in the hands of Mr. Y, right? So here we know what is the sale consideration, which is 18 lakh 75,000 is the ultimate sale transaction that has happened between Y and Mr. C. It has happened in the previous year, so we'll consider this value. But what should be the cost of acquisition for Mr. Y? We know the cost of acquisition for Mr. X is given, but what is the cost of acquisition for Mr. Y is not given at all. How do we ascertain this? This is the main question. Yeah. Can anyone tell me how to ascertain this? Or can anyone give, share his experience or throw some light on this? Can anyone share something about this?
If the cost of acquisition for a particular person is not given, then we have to not take that. The others persons we have to consider. Whereas for the cost of improvement they have given, so we have to take it.
Right. What you say is right. So what we'll try to solve this particular problem in as simple way as possible. It is a bit confusing, so those who are not able to understand it, please stop me and let me know. Okay, so that I'll be able to explain you once again how do we uh, go about explaining this particular or understanding this particular problem. Okay, please stop me if you're not able to understand, because I want you to understand this particular problem very, very thoroughly well, because two times repeatedly this problem has been asked. Repeatedly this problem has been asked. Okay, so let us start. So Mr. Y sold his particular property to Mr. C for 18 lakh 75,000, which is a sale consideration that happened during the previous year. So whatever is the value here, the same value I mention it here as 18 lakh 75,000, right? Now, in the entire problem that we understood so far, there is no expense on transfer. Okay, there is no charges that have been incurred on transferring the property either by Mr. X to Y or by Mr. Y to Mr. A, B, or C. So there is no concept of transfer charges that are mentioned here. So I will mention the value as 0 for our simplicity's sake. Next, we have to find out the indexed cost of acquisition. Now, cost of acquisition to the previous owner is 95,000. Remember this particular transaction, what happened? Okay, Mr. X has purchased this particular property in 1996 for 95,000 rupees. Okay, he enters into an agreement with Mr. A for 2003, and finally the deal did not happen. So, in other words, Mr. Y, Mr. Y inherited the property in 2005. Are you able to understand? Mr. Y inherited the property in 2005, and whatever is the cost of Mr. X, the same cost we have to assume for Mr. Y. Are you able to understand? See, Mr.
Yes,
Y
sir.
did not pay any rupee to any, did not pay any amount to Mr. X. So whatever is the cost of acquisition for Mr. X, the same cost will be applicable for Mr. Y. Do you agree with this? Are you able to understand what I'm trying to tell you? Mr. X paid 95,000 rupees in 1996 to acquire
Yes,
this
sir.
the property. After that, something happened between X and A. We are not bothered. Why are we not bothered? Because they have clearly told us to find out the capital gain in the hands of Mr. Y. They have not asked us to find out the capital gain in the hands of Mr. X. So anything and everything related to X, we are not going to consider. Clear? Now, Mr. X gifted this particular property to his friend Mr. Y. In other words, Mr. Y inherited that particular property in 2005. So whenever you inherit the property, whatever is the cost of acquisition for the previous owner, the same value will be applicable for you. So in other words, cost of acquisition for Mr. Y was also supposed to be considered as 95,000. But there's a problem now. The transfer took place, the gift deed took place in 2005, and 2005 happens to be after 2001. And therefore, even though the property is inherited by Mr. Y for 95,000, we are not going to consider 95,000 rupees. We have to consider the fair market value as on 2001 as 1,15,000 and then make our calculations. Are you able to understand the logic here? So I'll come to the problem part of it. So we have to find out indexed cost of acquisition. To find out the index cost of acquisition, first we have to find out the regular cost of acquisition to the previous owner, which is 95,000 rupees. Fair market value of the house property as on 1/4/2001 is 1,15,000 rupees. Okay. Now, this is the tricky part of it. Mr. B, Mr. Sorry, Mr. Y, okay, decided initially to sell this particular property to Mr. B, right, for 8,50,000, which is given to in the problem. And Mr. B agreed to purchase that particular property and gave an advance of 50,000 rupees. But for some or the other reason, Mr. B was not able to keep his promise, and therefore, whatever advance was given to Mr. Y was forfeited by Mr. Y. Forfeited means not returned back, right? So for all practical purpose, the cost of acquisition for Mr. Y is going to be 1,15,000 minus 50,000 rupees, which is the advance that he received. So in other words, the cost of acquisition for Mr. Y is just 65,000 rupees. How many of you are not able to understand this logic? Please tell me. How many of you are not able to understand this particular logic? Getting it, all of you?
Excuse me, sir.
Yes.
So forfeited by Mr. Y means it's a loss for him.
It's a loss to Mr. B.
B. Okay.
It's a loss to Mr. B, not to Mr. A. It's a loss to Mr. B, not to Mr. A. Please understand this. Getting it?
Yes, sir.
Any other doubts in understanding this logic here?
No, sir.
No, sir.
Okay, now let us move on. So finally, this is the amount that we are going to consider. So 65,000 is the cost of acquisition for Mr. Y. Now, we have to do indexation on this particular value. So when we do the indexation on this particular value, we arrive at 1,82,000. Now, what did I do? I considered the indexation values given to me in the table, and using these values, I have found out the cost of acquisition or indexed cost of acquisition for Mr. Y. Clear? The rest of the problem remains as it is. Only thing is cost, when it comes to cost of improvement, there is no change. Any cost incurred prior to 2001 will not be considered here. So there are some costs that were incurred prior to 2001. Those costs we are not going to consider. We are going to consider only those particular costs which have been incurred after 2001. So for example, Mr. X did something to the property, we are not going to consider. Mr. Y did something to the property, we are still not going to consider. We will consider only those values which have been incurred after 2001. So there was one expenditure that was incurred in 2003 and 4. The cost of the expenditure was 4,000 rupees. Accordingly, those CII values have been mentioned here, and we found out what is the indexed cost of improvement for that particular expense. Likewise, there was one more improvement that took place in 2011-12. Accordingly, the CII values were considered, and then we were able to arrive at indexed cost of improvement for 2011-2012. Right now, what I need to do, I need to add 1, 2, and 3. I need to add these three values and subtract these three values from 18,75,000. The final answer that I get is 14,50,000, 14,15,248 rupees as a long-term capital gain. Clear? The only confusing part here is this part. There is nothing else to get confused as far as this particular problem is concerned. And most of the students go wrong here itself. Instead of deducting this forfeited amount, they consider full 1,15,000 and calculate the value. And they say that we have done the problem correctly, but ultimately it's not correct. You have to reduce the forfeited value and arrive at the new valuation of the house. And based on that, you calculate your indexed cost of either improvement or acquisition. Whatever is the condition given, you have to use those values. Any doubts in understanding this, please?
No, sir.
Okay. So these, if you observe the problems that I have solved so far, none of the problems are similar to each other. There's something different when it comes to the 4 problems that I have solved. There are other problems also that I will solve. Okay. And I'm going to send you this particular sheet. Okay. Do you want me to take a photograph of the solved problems, or you want me to solve it here the way I have solved it in a Word document and then send it to you?
So the Word document we have,
Word document.
please send the.
Okay, I'll send you the Word document itself. The only thing I wanted to discuss today is this particular problem, nothing else. Okay, the other problems, I will discuss it, I will solve it, and I will send it across. Those problems are quite simple. Only thing is, one side the financial assets are given, on the other hand the physical assets are given, and third, some transfer has taken place. I think one problem we have already solved on similar basis. I think the second one, if I'm, yeah. So here we have financial assets and here we have physical assets. The problem that I'm going to send you across are going to be on same thing. So one is a physical asset, okay, one is a non-physical asset, that is financial asset, and the next column that I'm going to add here is something which is related to gold. Now gold can be considered as long term, gold can also be considered as short term, depending on how the gold is being used. Based on that, it can be treated whether it's a short term capital asset or it can be termed as a long term capital asset. Okay, so all those problems and something related to similar type will be solved and sent you across on this particular Word document itself. Is that okay? Plus the 21 problems that I had given you in the PDF format, which you are expected to solve. Which you are expected to solve. So all those things will be given to you. On completion of this, I am going to complete income from capital gains. The next unit that I'm going to start is income from business and profession. Clear? Do you want me to solve any more problems on capital gains? If you want it, I will solve it. By the way, these are 4 problems that I've already solved. I'll be solving another 4 problems and sending it across to you. Okay. Apart from that, if you have any doubts, please come back to me, or if you feel that even 8 problems are lesser, I can solve more. Whether you have that capacity is what you have to decide. Yeah, this is the only thing that I wanted to
So
discuss.
problems.
Yes, yes, go ahead.
So problems based on a block of assets, sir. So please send these 2 problems where like block of asset, the percentage will be given, and differently we have to calculate that COI, COA and COI, sir. That type problems are there, sir.
Got it. Got it.
Please send that.
Yeah. Fine, I'll do that. I'll do that.
Yes, yes, sir. Thank you, sir.
I think that's it. This is the only thing that I wanted to discuss today in the afternoon's class, because I know it's very difficult to concentrate in the late afternoon, and that too on a subject called tax management. Okay, so this is the only problem that I wanted to discuss, nothing else. You need to tell us about tomorrow's decision, whether you are attending classes or you want an assignment. What has to be done? Please tell me. I think I have my tomorrow I have third class, and that is on tax management itself. If you want a class, I will start with income from business and profession. The initial part of income from business and profession. By the way, income from business and profession is a huge, very vast area, because we have to study their income from business and profession under two heads. First is, if you are a sole proprietor, what is your income from business? If you are a partnership firm, what is your income from business? If you are a company, if you are a director of a company, then what is your income from business? And then if you are a profession, like for example, lawyer, a chartered accountant, a doctor, then how they will not have profit and loss account, they will always have an income and expenditure account. So we have to understand all these concepts once again as far as income from business is concerned. Further, we also have to understand income from partnership firms as an entity only, and income of a partner. Okay, and third part is what we have to understand is, in case if a person has multiple business and one or two businesses are having profit and other two businesses are having a loss, how to set off these losses, or if you're not able to set off the losses, how do we carry forward this loss to the next financial year? So it's a very vast and exhaustive topic, that is income from business and profession, so which will require a lot of classes, and I'll be starting that particular part by tomorrow itself. Clear? So I think that's it. You have not made up your mind whether you want classes tomorrow or no. So we'll stick
Sir,
to the
take
point.
classes tomorrow, sir. Sir, we want class. I want classes.
Fine. Anyway, it's in the morning, so morning classes will happen if I'm not wrong. Afternoon may or may not. I'm not sure about it. But morning classes, I don't think there will be any problem. Okay. So today evening you will get this Word document which is solved. Okay. And from tomorrow onwards, we'll start with income from business and profession. Clear? So thank you very much for attending this afternoon class, and see you tomorrow.
Thank you, sir.
Thank you, sir.
Just wait, I want to take the attendance once. Yeah. Thank you, and see you tomorrow.